Right, there's a few tips on shorting the market. So, excuse me. What we're looking at right now is a coin that's going to come down at some point quite soon, but at the moment it's going up. So what we're looking to do when we want to short this, we're looking to find a situation where it's comfortable to say that we're at a high point, which isn't where we are right now. One of the main things I look at is the green 50 exponential and the white 200 exponential, and the general sort of trend that seems to apply across the board is that if we're beneath at least the white exponential, and preferably the green too, we're going to be coming down incrementally in steps, and if we're above them both, then we're going to be going up again. But obviously there will be a turning point where things fall down and collapse, and we might be looking at a turning point now that the indicators aren't they don't come as precursors, they come as a result of a move, but then we also have a continuation of the move afterwards. So at the moment what we see is we're above the green 50, we're also above the white 200 exponential, but there is a little bit of a sell-off taking place now. We might probably will be bouncing and going back up and making probably be making more highs again. But what I'd also be saying is that these are the moments where you want to be waiting to see if there is a reversal, and we're looking to place a short. One thing I'll be waiting for is for this MACD to make a cross. We're making a cross at the moment, but it's still a cross in bullish territory. Bullish territory is anywhere above this 0 point here. So even though there is a cross, it still would suggest that there's perhaps maybe continuation to the up, even though the MACD wants to come down again. So you can still come down, to the centre of the Bollinger Band, or maybe even to the bottom of the Bollinger Band, and still be in bullish territory. So don't be fooled just because there's a cross. That doesn't mean that it's going to be going down. It might just mean that it's come down now and it's ready to go back up again. We're in bullish territory here. And also because we've got a nice spread difference between the white and the green exponentials, and we're trending above them both, it probably means that we're going to have a continuation up. When these formations break, however, though, there's usually a big plummet as a result of it shortly afterwards. So if we go back in time, just ever so slightly back in time, so here this is where it crossed last time to the down to start a bearish move. So the Bollinger Band had got really tight, quite tight. I mean, this is our highest point here. We were coming back down, and we were at some points being rejected from the middle of the Bollinger Band, which is also a good sign for getting ready to short something. Doesn't mean we short here though, because again we have a spread here between the two, but we're falling in between the two now, which is starting to show signs of weakness. Also, if you look at the MACD, we're in bearish territory ever so slightly, because we're beneath the 0 point. This is just a very brief overview of how to use a MACD, by the way. There's more to it than this, but generally speaking, that's one of the things to look for. So we're trending beneath these two here. Our candles aren't closing above, they're closing in between the two, so it suggests that there's going to be some kind of switch over very, very soon. Anyway, what happened at this point here is where we started to see it really turn around. So we had one last big attempt to try and get to the top of the Bollinger Band, and we broke down from that, rejected from the green 50, and you could see at this point here it really fell down, and the Bollinger Band started to spread. The difference between the top and the bottom was quite large at this point, and now here we had our inevitable cross take place. Now sometimes what happens when the cross first of all happens, that there's one last attempt to try and reverse that and just try and get above it. So just because there's a cross doesn't mean you want to be selling there, not at all. You want to be playing support and resistances within the Bollinger Band as you do that. So what we saw here is we had a big sell-off. The MACD now in bearish territory, very bearish territory, a nice spread between the blue and the red, and the cross taking place at this level here, which would suggest that we're waiting at this point now to actually find an appropriate entry for a short. So don't be shorting down at the bottom of the Bollinger Band. That's a terrible idea. Don't be doing that, because the way that Bollinger Bands works, even though they're in bearish territory, there is going to be moves to the up, moves to the down. And what we saw here is there was that one last push that we saw to try and get this green to come up and cross that white, and it didn't happen. But what we did see in that time is that we saw that it came back into the bullish territory actually on the MACD. before it fell back down again. So what I would have been thinking about at this point was, after we saw the cross here, most of the time the crosses, they do happen and they continue, but sometimes you get a little fake out cross and the bulls do win. So it might have been an okay time to think about, and obviously this is all in hindsight. It's very well to talk about what you do in hindsight, and you might not have been available to make the trade, to be honest with you. These are the sort of things you can only really take advantage of if you're sitting by your computer, and not many people, including me, have the opportunity to sit at a computer all day and make trades. It would be nice, I suppose, but it's just not possible. So this would have been perhaps a really good entry point, not only in hindsight because we can see that because we saw what happened as a result, but because we waited for it to reach to the top of the Bollinger Band, and that would have been our entry point. Our stop loss would have probably been just around about here, giving it a little bit of time to reset and wick, just in case there was a little spiky wick or a continuation of this move, because again it did trend and break above not just the Bollinger Band but the green and the white. But the situation looked bearish. We had a cross here of these two. We're at the top of a Bollinger Band, and we've basically been in bearish territory for a while now. Even though this area here was bullish, it's not very steep, and at this point here we already started to see the tailing off of that. So here would have been a great entry point. You could have ridden this one down to the bottom of the Bollinger Band here, but because there's a gap between the white and the green, and we're now falling into bearish territory, you might actually consider holding this one, as you've got a really good entry point. What happens is, once you get down to this level, you could even readjust your stop loss to be just above, or should I say just below, where you bought it from. So if it were to come back up, you would be stopped out at a profit. So that's always something you could think about doing, and just waiting and leaving it. Now I did actually hold a short around here somewhere, and I closed it off I think around this area here, so I did actually quite well out of that one. I don't remember where did I get involved. It was somewhere in the afternoon actually. I think it was around here where I got involved in mine. So yeah, this area here, a bit of a strange area to be getting involved in, because we had a big sell-off here, and a lot of the time when you have a sell-off you have a bounce and a continuation up. But I think what I would have seen at this point is that the spread here between the white and the green was so vast, and we were being rejected from the green, that I think this is probably why I decided to place a short in. And actually, yeah, I remember exactly why I did it. If we zoom in here, we see very, very low volatility going on, extremely low, and you can see the MACD is mostly in bearish territory, but it's on the line. It doesn't. It's the moves are ever so small, which basically means most of the time when you see something like this, it means that there's going to be a really big move ahead. If the volatility tails off and there's really not much to it, then it generally means there's a really big move ahead. So judging from what I've just told you about there being a spread between the white exponential 200 exponential and the green 50, it would suggest that the likelihood is that the move will be to the down. Also, what we were seeing is that we were being rejected every time from the green, which means that it wasn't even getting to the top of the Bollinger Band most of the time, and then the inevitable happened and we had a huge move down. And this is why you want to be having an automatic sell order. So you wouldn't have been able to really sell this manually. I remember when this happened, it came down and back up again within seconds really, and I had a sell order around about this level here. I can't remember exactly why my reasons were for it there. Obviously it would have been great to have caught it down there, but the people that have managed to do that have, they're in such a small minority that it's, you want to be safe in closing it off. So I closed it off here. I had an automatic sell order. I made a sell and locked in my profits, and it's probably just as well, because look at what happened to it overnight. It came all the way back up again, and would have actually stopped me out completely, and like I say, the rest is history. Now we've got our cross and we're doing the absolute opposite of what we saw yesterday, so it looks like we're going to have a continuation to the up. So, the use of the green 50 and the white 200 exponential alongside the MACD is quite an important way of trading on a 5-minute basis and spotting a trend and a trend continuation. And if I was to be if I was to put my money on it now, and like I said, this isn't an opportunity to make a trade right now. We've missed the boat here. We've completely missed it. So it's time to just leave it alone and get on with the rest of your day. But if I was forced at gunpoint to place a trade right now, what would I do? I would say that it looks like it wants to come down ever so slightly, but the continuation will be to the up, and so what I would do is, if I had to, I'd place a trade probably around about this Bollinger Band center here, or if I was lucky to catch it, I'd be placing a trade around this green 50 and riding it up to perhaps maybe just about the top of the Bollinger Band, because we are going to have a continuation, because the indicator suggests we're in bullish territory here. Even though there looks like there wants to be a bit of a pullback, we're still in bullish territory. We've got a spread between the green 50 and the white exponential, and like I say, in the very short term, we're probably going to be going up. Anyway, I hope you learned something from that. Like I say, I can make more videos on the way I trade and the indicators that I use in more depth if you want me to. So I hope you have a nice day. Take it easy.